Mark, these numbers are better than the street was expecting. And obviously, you all have been dealt with a lot as we've gone through coronavirus. You are a very good indicator, I think, of what's happening in the global economy because you touch so many arenas. Things don't move without using some of your products. So maybe you can talk us through what you've seen. The numbers were better than the street was expecting for the second quarter. But for two of your three main segments, the numbers were down from the first quarter. And for all three of them, they were down from the second quarter of 2019. Where are we in this right now? What kind of trends are you seeing?
Good morning, Becky. You're right. Our results were better than expected. At a headline level, we generated $743 million in EBITDA and $638 million in free cash flow. You mentioned our box business. That's about 70% of our company, and the most segments remain strong. We ran well as a company. We've got a great customer list. We do make about one in every three corrugated packages, but in the U.S. market. But processed food is stable. Protein, so meat, actually recovering from the early issues they had in their factories, is doing very well. E-commerce, multiples of normal growth, orders of magnitude, double-digit growth. That's not a new story here through this pandemic. And then we're seeing some improvement in durable goods and in non-durable manufacturing. So a slow, steady improvement and a lot of resiliency so far in the corrugated box segments.
I think you have pointed out truck transit times, what you watch for with the rail transit times, with the truck transit times. What are you seeing there right now, and what does that tell you about what's happening in the broader economy?
So that's a great question. That is an indicator that we look at because we move so much material, both input materials to our plants and factories, and then, of course, our products out to customers. And as it was very loose in the beginning of the shutdowns and just a few months ago as we ended the second quarter, or ended the first quarter, things have tightened up a bit. We've seen trucking times and rail times return to a little bit, not normal, but a little bit tighter, a little bit more normal dwell time. I've seen some of the railroads announced bringing back crews, which is an indicator of increased business. So I think all of that's a good thing. We're set up to operate with normal velocity through the supply chain, not the amount of slack we've seen before. So again, lots of uncertainty looking forward, but a number of indicators, our downstream segment indicators, and then things like you just asked about on supply chain, appear to be moving in a positive direction.
Mark, when you look at demand for containerboard, how does that match up in the United States versus what you're seeing maybe globally in Asia or in Europe and other places? Is this a kind of a rolling recovery that's taking place, or are there some areas that really are recovering much better than others?
Well, I think it's rolling. I mean, Asia started to open up. The areas that were shut down are restricted sooner, and so we did see some demand for containerboard. That's really what we sell in Asia, containerboard. We don't make the boxes anymore in the Asian countries, but we make the materials that go into those. Europe, I would say, is a little behind the U.S., but some of the markets we're in tend to be in the south of Europe, where they were hard hit with the coronavirus, and we're beginning to see some pickup there. A lot of that is fresh food. So I'd say the U.S., again, it's regional, just like you see on the different maps of where states are in their reopening process and managing setbacks and all of that. But it is a phased opening. You mentioned our results were slightly lower than this time last year. So that when you put it all together, there's some really great segments and some really great geographies, and then there's some that have not recovered yet. So it kind of flattens out into a year over year, just about the same or slightly down.